the end of a long shift, your pager finally quiet, and all you want is a plan for your money that actually works while you sleep. Warren Buffett, the Oracle of Omaha, the greatest investor of our time, is retiring at the end of 2025. But before he goes, he's leaving us with a final money lesson that I think each and every healthcare professional can learn. And this is real estate versus stock investment. And what he just said might surprise you, especially if you're in healthcare. Now, back in 2012, Buffett called buying a home with a 30-year mortgage a terrific deal, especially if you plan to stay in it for 5 to 10 years. He even said that he'd buy hundreds of thousands of homes if he could manage them just to take advantage of the low mortgage rates. But fast forward to 2025, and he's flipped the script. Today, he favors stocks over real estate. And he says that the U.S. stock market has far more opportunity. Meanwhile, real estate feels a little clunky. The negotiations, the management, the tenants, stocks, you can move billions in minutes, no stress and no middleman. So let's talk about the numbers of stocks versus real estate. And here's where it gets even more eye-opening. A CNBC data pulled from 1988 to 2005 showed that real estate measured by the Case-Shiller Index showed an increase of 374% during this period. Now, can you guess what the stock market showed? And this is measured by the S&P 500, which is the top 500 companies traded on the U.S. stock exchange. Now, the S&P 500 had an increase of 2,218%. And when the dividends were reinvested, that increased substantially to 5,106%. So the translation is if you put $10,000 in real estate in 1988, you'd have about $47,000 today. If you put the same $10,000 in the S&P 500, $231,000 today. And if you reinvested the dividends, that's over $510,000 today. Now, that is the power of compounding. That is the power of making your money work while you sleep. So you don't have to trade shifts to earn money. You just trade stocks to earn money. Now, there are some advantages for real estate, especially as healthcare professional. And this is why many physicians, nurses, PAs still lean into real estate. And that is because it is a tangible asset. You can see it, you can touch it, you can walk through it, look at it after your 12-hour shift. You can even take a nap in it. It feels more real than just numbers on the screen. It also provides some leverage. So you put $100,000 down and you control a $500,000 property. No brokerage lets you do that without massive risks. It also can provide substantial cash flow. Rent checks often outpace stock dividends. Think of $5,000 in a yearly rent versus $2,000 in dividends on the same investment. And those rents rise with inflation, giving substantially more cash flow over time. And this is one of the reasons why I like it, which is tax advantages. And this is a big one for high income earners because mortgage interest is a tax deduction. Property taxes, repairs, all of it deductible. And let's not talk about depreciation. That's a paper loss that you can use to offset your income. And with strategies like the short-term rental loophole or real estate professional status, some docs can literally cut their tax bill by 6 figures. So try doing that with just index funds. Now, one of the advantages that Warren Buffett talks about during this time and why he likes stocks is because they're passive. You can do them quickly in 5 to 10 minutes, no headaches, no long negotiations. So don't dismiss stocks. For healthcare professionals who barely have time to meal prep, let alone manage tenants, stocks are an ultimate passive way to play. They also provide substantial liquidity. You can buy or sell stocks in seconds. No waiting on appraisals, no waiting on lawyers. They also are passive. Index funds and ETFs are the definition of set it and forget it. And there is substantial growth. So historically, stocks have crushed real estate in pure returns. Lastly, you have diversification. You're not putting all of your eggs in one basket. One S&P fund gives you exposure to hundreds of companies. So they are also low cost. You can start with $1. No property taxes, no water heater replacements, and no tenants that you have to deal with. Literally, you have just tiny expenses when you're dealing with low cost index funds. The stock market is also accessible, right? You start with $1, $10, $15, and you can get in today. The bottom line for healthcare professionals is you have to decide which one you should pick. If your main goal is purely returns with minimal efforts, then stocks win, especially the S&P 500 or the total stock market index fund. With those dividends invested, history shows that you can win big. But if you're a high income earner and you're getting crushed by taxes, then there might be opportunity here because you can do a cost segregation study and minimize your taxes substantially. Now, taxes are only one of the reasons to invest in real estate. You have to also appreciate some of the other things that real estate offers and think about the cash flow. If the deal is right and the cash is flowing, then real estate might be a better option for you. The smartest play is to use both of them. And honestly, that's what we do. Stocks give you compounding growth that runs silently in the background while you're rounding or charting late at night. But real estate, it gives you leverage. It gives you some cash flow and those tax strategies that keep more of your paycheck in your pocket. Wealth building in healthcare isn't about chasing profits. It's about crafting a plan that fits your lifestyle, your tax situation, and your energy. What do you think? After a 24-hour call, would you rather log into Vanguard or deal with a leaky toilet? And honestly, I haven't dealt with any leaky toilets yet as a real estate owner, but again, anything is possible. And remember, you want to balance your portfolio, protect your time, and let your money work as hard for you as you work for your patients. If this is something that you've been thinking about, let me know in the comments where you stand. Are you team stock market or team real estate? And if you're a woman in healthcare who's like, I'm neither because I am not investing, but you want to, then I want you to click the link and set up a call with me. This is one of the things that I help women in healthcare to do and to do as passively as we can. But the first start is enhancing your financial literacy and building your financial confidence. So if these are some of the goals that you're looking for today, if you want to buy that real estate property in 2026, but you don't know how much you can afford, then click the link below. If you want to invest in the stock market, but not sure what you should choose, then click the link below and see if my coaching might be a good fit for you. Until next time, let's keep more of our hard-earned money and make good financial decisions. I'll see you in the next video. Bye-bye.